Hi everybody, this is Bob Iacchino along with Mike Arnold from Path Trading Partners, and this is an afternoon Path chat covering the futures markets for May 31st, the last day of the first month of the second quarter. Quite a few economic reports. I covered a bunch of them in this morning's AM Path chats. We did two of them this morning, one on the future side and one on the FX side, and admittedly I mixed a bunch of the data. I didn't match the data to the particular subject matter that we were covering in the Path chat, but since we only do futures, it'd be pretty easy to just go over what was left. The Canadian gross domestic product, the important number, the year-over-year number, hit it out of the park in terms of the expectation. The expectation was 2.9%, and their year-over-year GDP was 3.2%. Their quarterly gross domestic product annualized, which is also important to look at, missed though. It was expected at 4.2%. That came out at 3.7%. I would say that based on the price action, the year-over-year GDP was much more important as it matches up to what the other countries are putting out there. U.S. Chicago purchasing managers, 55.2 versus an expectation of 57. And then the Beige Book came out today, and it painted a generally upbeat view to the U.S. economy, and it appears to kind of boost the case, or at least secure up the case for a June rate hike. The CME's Fed Watch tool, CME Group's Fed Watch tool, which you can get at cmegroup.com/trading/interest-rates, or you can just Google CME Group Fed Watch tool, has the probability of a June rate hike at 91.2%. While that's high, it is down a tick from yesterday. Yesterday it was at 92.3%, but a week ago it was down at 83%. So the probability of that rate hike, at least based on the Fed Fund futures, continues to creep up. We are waiting on China's Caixin PMI, Australian private capital expenditures, and Japanese capital spending. Those have not come out yet as of the recording of this Path chat. A couple of other things I wanted to look at. The U.S. crude inventories, the EIA numbers came out today, and we saw stocks draw down, products build, and record refinery run rates. U.S. crude oil inventories fell 3.6 million barrels compared to analyst expectations for a decrease of 1.7 million barrels. And refinery runs rose by 347,000 barrels a day to a record 17.3 million barrels per day. And the utilization rate rose to 94.1% of total capacity. That's the highest rate since November of 2015. Crude oil consumption, however, total product demand, fell 2.2% from a year ago to 19.5 million barrels per day. Gasoline stocks also rose 3.4 million barrels compared with the expectations for a 1 million barrel per day drop. Inventories of gasoline have rebounded in the last couple of weeks, putting them on par with 2016 levels at this time. That is kind of high seasonally, and if that demand for total product continues to show weakness, you'll continue to see what we saw today, which was a decent drop in crude oil that Mike will talk about. So having said all that, let me turn it over to Mike so he can go over what he's seeing on the charts. Mike, it's all yours.
Thank you very much, Bob, and good evening, everyone. So, briefly, the VIX got above 11 today up to 11:30, but then closing back down at 10:41. Let's take a look at the financials first and see what maybe caused a little spike in the VIX. We're switching over also to the Dow futures, the E-mini futures specifically, instead of the industrials. We've had some requests to do that. So, slight drop in the industrials today. You can see it dipped into the rotation zone, but then rallied back up, still closed down for today. If we pull back again tomorrow, we're going to be watching for about 20,925 as first level support, then 20,898 to 20,900 as second major level of support, which is the bottom of the rotation zone. If we were to get a bigger drop, the next major level would be 20,800. If we rally back up, there's going to be some pretty key resistance at about 21,070. Then we'd be looking to test the most recent highs, 21,095. Then, if we get through that, a possible run up to 21,162, the most recent major highs. Switching over to the S&P E-mini, which did close slightly up today, went down, tested a prior breakout zone pretty much to the penny on that, and the rising 8, the top portion of our rotation zone. If we drop back down this 2402 level, the 2402 level is going to be key support. If that's broken, the next major level is 2,395 area, where we have a GAN level and a rising 21. And then if we were to experience a very big drop, we'd be looking at 2,382 area. Rally back up, we're going to have some minor resistance at 2,414. Then we're going to have pretty major resistance at 2,417 to 18 area. That's going to be key. If we do get through that, we could eventually get a rally to 2,430. And finally, over to the Nasdaq. Nasdaq, guess what? Another new high today. Pretty much closing flat though. So, new high today ran up to $5,819.25. If we happen to go down tomorrow, key support coming in at 5,760 to 5,752. We have rising 8 and a GAN level there. If that is broken, next key area is 5,723, and then on a bigger drop, 5,700 to 5,690. On a rally, minor resistance is going to come in at the 57.95 area. Then we'll be looking for the 58.19, today's highs. And then if we do get through there, 58.78. Switching to crude oil. Crude oil, we are watching for a potential trendline short trade if we get a close below our new defining point on our rising trend line, which is 48.18. So if we get below this 48.18, we'll be looking for a potential downward move all the way to this 46.17 to 46.20 area right in here, which would normally take up multiple days unless we got a very big drop. So if we head lower tomorrow, 48.21 is going to be the next key area, followed by 47.88, then a possible retest of today's lows right around 47.72, and then if we get through there, 47.51, and on a very big drop, 47.07, next key level down. On a rally back up, we're going to be watching for 48.76 as any rally targets or first level of resistance. Then the next major area is 49 to 49.03. If we got through there, 49.60, where our significant level is. Switching over to gold. Gold moved higher today. Came back retesting yesterday's lows right around that 1261.80 area we've talked about. We have the rising 8 just below that at 1261. If we do pull back, that's going to be very key. 1261.80 to 1261, and then next area down about 1258.50, and then if we were to decline further, 1256, and then 1254, where we have a rising 21 coming in. Lots of support areas coming in here. On a rally back up, this 1271.80 is going to be minor resistance should we open slightly lower. Then we'd be looking for the next GAN level higher, which we touched today, and today's highs, which come in at 1276.80. Getting through that, we're going to look for the next key level higher, 1282.50 to 1284.50. And finally, switching over to silver. Silver did not rally today. Formed an inside day from yesterday, which means it had a higher low and a lower high. Finding some support again right near the 52 200-day exponential moving average. If we head lower tomorrow, key support about 1722 to 1720. That's broken. 1716, we have a rising 8 and a GAN level. Then if that's broken, we could watch for a potential move down to 1706, where we have a rising 21 and another key level on our chart. Rally tomorrow. Minor resistance is going to be about 1742. Then 1746, and if we can get through 1746, we will be targeting 1753. If we had a very big rally, the next key area is about the 1765, which is the 200-day simple moving average. That's all we have for you this evening. Back to you, Bob.
Thank you for that, Michael. Cheers, everyone. Thanks for watching, and we will talk to you guys in tomorrow's set of Path Chats. Cheers, everyone.